This is chapter 14.2. It's a bit of a long one. It's kind of boring. It's about taxes. So,
I'm kind of bored right now.
just kind of sit through it. Shut up, Skylar. Sit through it, and yeah. Oh, and you can follow. You can follow along on page 369 to 374. A lot of it's out of the book. Alright, so yeah, the government obviously has to have a lot of taxes because we spend bigly on our stuff. It gets most of its money from federal tax on individuals. Doesn't really get it from trade that much. It's mostly on just taxes. These taxes include income tax, corporate income taxes, social security taxes, Medicare taxes, unemployment taxes, estate taxes, gift taxes, import taxes, and excise taxes. So there's a lot of taxes because the government needs to pay for a lot of stuff. So yeah, it kind of sucks. Income tax. This is like kind of the backbone, the kind of foundation. So there's gonna be a lot on this slide. So what income tax pretty much is, it's money that they take out of your paycheck pretty much to just kind of pay for the government stuff. It's not very fun when you get a paycheck and like half of it's completely cut off because the government said so. The amount of federal income tax a person owes is determined on an annual basis. This tax is collected in a pay-as-you-earn system. So yeah, again, whenever you get a paycheck, the government just takes them instead of just everyone pays it at a certain time of the year. Individuals, it raises with the amount of taxable income. So the more money people are making, generally, the more they're going to be taxed, because that's how it is. And taxable income is a person's gross income minus exemptions and deductions. So exemptions are side amounts that you subtract from your gross income for yourself, your spouse, and any independents. Tax deductions are variable amounts that can subtract or deduct from your gross income. Every year, the IRS publishes new tax rate schedules that change with changes in the federal tax code. I don't believe these happen very often. If you're curious, you can ask Plumber what the IRS is. So yeah, Mikey will talk more in depth about it. They have until mid-April to pay all their income taxes, so that's like the deadline. If you don't pay your taxes, that's a typo. If you don't pay your taxes, your employer will withhold your pay until you pay back the income taxes. So pretty much, if you really don't pay your income taxes, the employer will just pretty much take your check and then put it towards your income taxes. We'll just kind of hold it. So you pretty much don't get paid until you get all your income taxes paid. However, you may have tax credit to help you with your taxes. We'll talk about that a little bit later, but tax credit is pretty much a variable amount that taxpayers may subtract from the total amount of income tax. So there's things they can kind of cut off your income tax. Alright, so corporate income tax, excuse me, makes up 10% of federal reserves. It raises with taxable income, like just income tax in general. A business must have a certain amount of income before they are subject to taxation. I'm not sure the exact amount, but I bet if you do Google, it might have changed from when the book had it. A business can subtract many expenses such as employee health insurance from their income before they reach the taxable amount, so they do not have to pay taxes. So businesses will do this where they say they spend more on like employee health insurance or just other odds and ends of a business, so that they have less income, so they don't have to lose it to taxes. Then this is the corporate tax rate over the years. It's stayed pretty consistent, but in 2018, due to Trump's policies, it has dropped down to 21. So yeah, it's a pretty big drop. so it's good for businesses. Social Security tax. You pay for Social Security because of the Federal Insurance Contributors Act. Contributors Act, a U.S. law that creates a payroll tax requiring a deduction from the paychecks of employees, as well as contribution from employees to fund Social Security and Medicare programs. So pretty much what it's saying is, we're gonna mandate that we take some of your money from your paycheck to go towards Social Security. It's required. And Medicare. Most of the FICA taxes you pay go towards the Social Security Administration. You don't know what the Social Security Administration is? Basic description of it is a U.S.
You good?
Again, I apologize for this. You don't have to know this for a quiz, but this is wrong. I apologize. I kind of made this on late notice. That was my bad. But pretty much the Social Security Administration it's a government program that lends money towards the old age survivors and disability insurance. Pretty much it's a government program that lends money to people in need, like people of old age, disabilities, survivors of a tragic event, war, that kind of thing. Pretty much that's all you need to know about it, but it's not gonna be on a quiz or anything, just kind of extra information. One of the security programs that benefits from this is the old age and survivors disability insurance. What they do is they lend money to the elderly, survivors of a war, tragic event, and the people who are disabled. This has been happening since the founding of the Social Security Administration in 1935. The original goal of this administration was to help ease the effects of the Great Depression. And Plummer can refresh your mind on the Great Depression if you don't know what it is. But pretty much, I'll just give you a basic. Pretty much, what happened is the stock market crashed, and a bunch of people lost their jobs, a bunch of people lost their money, the banks went out of business, and it was horrible. So the government created this to kind of help ease that by giving families some money so that they can buy food. Now Medicare. Medicare is a national health insurance program that helps pay for health care for people over 65 and or have a certain disability. And I did some research. Some examples of these disabilities are end-stage retinal disease, automatic lateral sclerosis or ALS, my bad. Employed or not, you must pay Medicare tax on all of your earnings. So these are just a few charts. There's ones like selected characteristics of Medicare beneficiaries under the age of 65 compared to 65 or older. So pretty much it tells you how much money you're gonna get towards stuff. So it's kind of interesting. You can pause the video and look at them if you want. I just found them kind of interesting. Unemployment tax. The ordinary worker does not have to worry about this tax as the government only hunts down employers to pay it. This tax contributes to pool money that employees who are laid off to no fault of their own can access. They do this by filing for unemployment compensation. However, they really can't rely on this as it's only available for a set number of weeks, and they need to prove that they're actively working for a job. If they don't, they just cut them off. This is financed by both the state and federal unemployment taxes. So this is kind of like the employment rate, like a graph of the employment rate, and has its ups and downs. It kind of goes with the economy, has its ups and downs. But 2018, it's looking pretty good actually compared to the later years. It's looking pretty good. Excess tax. Excess tax is a general revenue tax on the sale or manufacture of a good. These apply to many products including gasoline, cigarettes, alcoholic beverages, telephone services, and cable television. So these are kind of like the taxes over the years. And if you notice a trend where the lower sales tax there is, the more excess tax there is. That way they can make up for the loss in sales tax. So it's kind of interesting graph. You can pause the video if you want to look at it more. I believe this is not recent though, this only goes to 2015, that is the most recent graph I could find. Estate tax. Estate tax is a tax on the total value of the money and property of the person who has died. It takes out of the estate before their heirs receive it. So when someone dies and they give their money to their heirs, when they say, yeah, I want to give all my money to the heirs, what the government does, it takes that money, it takes a cut of it, and then gives it to the heirs. But it's also just not even just limited to money, but also real estate like homes and businesses, cars, furniture, investments, jewelry, paintings, and insurance. So yeah, it kind of sucks. The tax increases with increasing value. So a $5 million estate will obviously be more taxed more than a $3 million estate. So it makes more sense. This is a graph of the estate tax trends over the years. So their highest was in 1950 to 1990, maybe kind of dropping but kind of rising up and stagnating. Since 2010, again, this is the most recent graph I could find. So it might have changed. Gift tax. Gift tax, a tax on the money or property that one living person gives to another. This was established in 1924 so that people could not avoid paying estate taxes by giving away their money as a gift before they died. It has limits on gifts, but allows for tax-free transactions for big amounts each year. Currently, a person can give up to $12,000 a year tax-free to several individuals. So yeah, it's not really enforced that much because $12,000 for gifts for each person. Like it's not combined, it's just each person. So that's a lot. People don't really spend that much. So yeah. Import tax. So taxes on imported goods are just tariffs. Tariffs are taxes on imported goods brought to the country. I've heard about this with Trump's tariffs. Can't remember how long ago. But he got a trade war with China, and he imposed tariffs. So he imposed tariffs like on steel and other products. I can't remember. It's like airplane parts or something. And when he imposed that tariff, it actually helped. It can actually benefit some industries like U.S. Steel, since the United States is importing less steel. They're buying more from United States Steel, so their stocks are shooting up. But it can also have some drawbacks, so it's kind of a double-edged sword. So then China, because it's a double-edged sword because the other countries are going to obviously react. So they're probably going to impose more tariffs on certain products like aluminum, a lot of steel stuff. Yeah, just a lot of metal because that's what we've been kind of, doing to them. It could be like food or anything that we do to them. They're obviously going to retaliate. Also can raise concerns. This graph is blurry for like no reason, but what it's pretty much saying is that most of the people are concerned about how this will affect industry and then government regulating, stock and financial market, that kind of thing. So it can raise concerns, it can make countries fight back, but it also can help some industries, so kind of got to be wise with that. How does this affect me, you may be asking? Well, governments sometimes use tax policies to discourage the public from buying products and do helpful behaviors instead. They do this by utilizing tax incentives. A tax incentive is the use of taxation to discourage or encourage certain types of behavior. So examples are like taxes on tobacco products and alcoholic beverages. Those are usually kind of higher because people don't want you drinking alcohol and using tobacco because they're bad for you. Tax incentives are also utilized by giving out tax credits. So they'll kind of reward you for doing good stuff. Like sometime the book mentions that sometimes Congress offered tax credits to consumers in the energy conservation industry. So people that kind of use solar panels, more energy effective things. And then Congress offered tax credits to consumers of hybrid vehicles. Again, it's like, it doesn't harm the environment, it uses electricity rather than fossil fuels, so it's kinda good. Owners of real estate can also claim credits for improvements that decrease the use of fossil fuels, so even homes, you can get credits if you like kinda decrease your use of fossil fuels. You can do this by making it more effective, by having more insulation and some replacement windows.